Hey, welcome to interaccess.io, the Interaccess channel. Wizard here to tell you a little bit more about banking the unbanked. This is a topic that we're going to be discussing for several videos here, several different talks, blog posts, podcasts, and such, talking about banking the unbanked, which is one of the cornerstones, one of the ethos of Bitcoin when it started, and now decentralized finance is trying to get to those people that don't have access to bank accounts and help them with their finances and help them get access to the system. Before that, I wanted to remind you, please subscribe to the channel here so you get the most up-to-date videos. We try to create these every few times a week, and we want you to have the most up-to-date videos so you can keep up with what we're thinking about and what we're doing. So please subscribe, follow us on Twitter at interaccess8. So now we're going to keep going forward with a little whiteboard wizardry here, talking about banking of the unbanked. In the last video, in the last lesson, we talked about the unbanked here in the US and mainly in the developing worlds. And the unbanked, the people who do not have bank accounts and why they might not have bank accounts. When we talked a lot about was the fees, which we always talk about, and the friction, right? Those intermediaries we have in mainly the banks. And not to put them in a bad light, but the banks and the services they provide, the trust level services, the idea that they hold my money and they keep it safe. And then they even outsource some of that trust and some of that insurance to the federal government. And getting into that little system costs money because the banks, they have to make money somehow. And if you'll remember real quick, just to go back, I don't want to reiterate the whole thing, right? But I put my money into the bank here and they perform a few functions. One, they keep my money safe. So if I put $500 in there, I am fairly certain, almost 100% certain that my $500 is going to be there when I want to take it out. Okay, so that's a really big part of it. Another part is they will sometimes actually pay me interest. They will pay me for for holding my money. So if I put my money there in a savings account that's earning some sort of interest, they'll pay me a little bit. Now I get the security of I can write checks, I can use a debit card, whatever it might be, but I'm part of the system. Now the bank is obviously going to take that money and lend it out, and they're going to earn an interest rate. Now they are going to charge an interest rate here. They're going to keep a lot of what's in the middle between this interest rate, plus they're actually going to charge me fees. I'm going to have to pay fees sometimes to use my debit card, sometimes to write checks, sometimes to deposit cash. If I have an account that's too small in value, that's under a certain amount, I'm going to pay a monthly fee. Now those fees and that friction is what is added up to so many people in this country not even having bank accounts, and so many people in the developed world. And you think, how in the developed world can you not have a bank account? Can you not have a place to put your money? Well, if you are literally getting income somehow, and let's go with the people who are documented, who have citizenship or residency or such. If you are making income, and that income is a lot of times in the form of cash, or maybe you even get a check, and you have bills to pay right away, you have food you have to buy right away, you don't have time on Friday to go put your money in the bank, wait until maybe Tuesday or Wednesday for that to be available, because the bank has to make sure with the other bank that the money's there, and wait for that time for you to have money in your account that you can then go write a check or use your debit card or something to pay your bills. You can't do that. You have to eat today, this weekend. You have to pay your bills right now, this weekend. You don't have time to wait. That's the friction part. The other thing is you don't have the ability to pay a $30 monthly fee because you can't keep a $1,500 balance. You don't have the ability to pay $35 every time you have an overdraft, every time you write a check for money you don't have, because again, you had to buy food now or you had to pay your bills now. So you don't have time for that, and as a percentage of what you make, it's just too much and it's not worth it. You're better off taking your check and going straight to a payroll paycheck advance place and cash your check right there, and you pay some exorbitant fee, but at least you get cash in your hand that you can then go buy groceries or pay your rent or whatever you have to do with cash. I've seen some instances. I had someone who did some work on my house, and I paid him a check, but he immediately went and was able to cash it at the bank, which of course he had to pay something for, but then he paid his workers every Friday in cash. Okay, so he had to have the money every Friday in order to disperse to his workers in cash. So the fact that there is this friction, the fact that there are these fees make it not make sense to even have a bank account, go through that. Not to mention if you have to go through the KYC, the Know Your Customer, you have to have driver's license, social security number, all those things. Some people just don't have that. Some people don't want that. They just don't want to go through that. So all those are reasons why many people in the developed world just don't go through the banking system. Well, the problem is also, once you're not going through the banking system on this side, once you're not in this little club, if you're in the kind of the cash club over here, where you're not over in the banking area, now you don't have the capability to go borrow money, right? Because you don't have a bank account. Who are you going to borrow money from if you can't even show that you have anything? If you can't show record of ever having assets, you can't go borrow. You can't earn interest on your money if you never have money in a place that pays you interest. Okay, what you end up doing is paying someone to give you cash for your check, because that person is then taking the risk that they're going to be able to go get the money from a bank. All right, so you don't get to participate in this part of the system. There's a great line from the movie Catch Me If You Can, where Frank Abagnale Sr. gives a checkbook to Frank Abagnale Jr. and shows him the Chase emblem and says, now you're in their little club. This is how you get in the little club, is you have an account. And so many people are locked out of the club, not members, because they don't have an account, because it costs them too much in terms of fees and friction. So back to this. Where can crypto potentially help? And a lot of this, again, is potential. This is not set in stone yet. This isn't even done very often yet. But a lot of this is potential where crypto and decentralized finance can help. So imagine a time, we can talk about it just in terms of Bitcoin, we can talk about it in DeFi, but imagine a time where when I get my income here, instead of getting paid with a check, I get paid, let's say, in Bitcoin. Okay, so it goes to my wallet, right? My wallet that could be on my phone, right? Or it could be some other type of wallet, but it goes straight here. Well, the beauty of Bitcoin, remember, is you can't send Bitcoin to someone unless you had it to begin with. So we eliminate this need for banks to wait 3 to 5 days processing time, settlement time. That doesn't need to exist anymore. Okay, so now I don't have those fees and that friction quite so much. So I get paid directly Bitcoin to my wallet. And now, if someone else will accept Bitcoin, if whoever I'm paying rent to will accept Bitcoin, if whoever I'm paying for my food will accept Bitcoin, I can turn around and buy food. I can turn around and pay rent, pay for my car, pay my employees, right, in Bitcoin. That can be, I don't want to say instantaneous, because we know that Bitcoin can take 30 to 60 minutes to actually clear a transaction, but that's a lot better than depositing a check on Friday and waiting for Wednesday to be able to use the money. This is same day. I know I'm going to get paid, and I know once it hits my wallet, it's already there. I don't have to wait for anything to clear. Once it hits my wallet, I have it, and I now have access, and I can go then spend it. Okay, and whoever I spend it with, they get access to it immediately. Okay, so that is one of the benefits when we start seeing crypto to the unbanked. That's one of the benefits. Now, and we don't have to go through the fees and the friction, which means I don't have to pay, if this is me and I get paid with a check, and then I have to go to a check cashing place and pay 10 or 15 or some exorbitant percentage to get that cash, I don't have to pay that anymore. Okay, which is beautiful, because now all of a sudden that 10 or 15% that was going to check cashing places, now I get to save, potentially. I can save that money. What happens when I save? Now I start to learn, oh my gosh, I can actually accumulate some bit of wealth, some bit of money in an account. So now imagine if you will, that either Bitcoin has the ability to participate in more decentralized finance type options like we talk about, or let's say it's some sort of ERC20 tokens, something like a DAI or a USDC now that I get paid into my crypto wallet, my Ethereum wallet, my DeFi wallet. So now I can then go pay for my food, I can pay rent, my car, my employees, whatever it might be. I can probably set some of this into smart contracts that gets auto paid. I can start saving, and now maybe I can earn interest on this because there are DeFi protocols. Now, whereas before I was locked out of the club, by virtue of the fact that I'm getting paid in cryptocurrency and I have this wallet, now I'm back in the club. And now I'm learning. This is a big deal because now if I figured out that I can now save that money that I was paying to get my checks turned into cash so that I could spend it immediately, I don't need to pay that. What if I save it? Now not only can I save it so that it's not being spent, so that I have a little bit of extra just in case, but now on that savings I can earn interest. Now on that savings maybe I can invest in something safe for me, and now I can start to grow. Now I get to be a part of the club. That is what to me is so exciting. When you have things like that, now maybe I can participate in more insurance, right? If I need more insurance for my family or for my home or for my car or something, that can all be part of this wallet. Maybe this gets me some sort of credit ability. So maybe now I can borrow money, and I can borrow it in a decentralized way by virtue of the fact that I have this wallet, this cryptocurrency that is going in here that I'm using to pay certain things, and I'm using to earn a little bit of interest. Well, now maybe if I need a loan from this system, because this might be the DeFi ecosystem, and again, this could be Ethereum, this could be Bitcoin, this could be so many other of the decentralized finance ecosystems that are coming out there. By virtue of the fact that now I'm in this club, maybe now I can figure out how to borrow, and I can borrow using something in here as collateral potentially, and I can borrow, I can build up some credit. I can set I can have smart contracts set so that the credit that I borrow gets paid back regularly, so that I don't default on anything. There's collateral there. So now I can start to get into that club. And again, we're not talking about DeFi in the sense of trying to earn monster yields or speculate or anything like that. We're talking about what it was really created for, which is which is disintermediating, which is not, I don't want to say going around the system like we're trying to circumvent it in an illegal way. We're trying to circumvent it in a way where we get rid of the fees and the friction. We lower the fees and the friction. The fact that I can get paid today and I can pay my bills today without some exorbitant fee in the middle taking that ability, right? Because the ability right now to get paid today and pay my bills today costs me 10 or 15%, and that's a whole lot of money to pay. The fact that I might have to waiting till Wednesday costs me $30 to $80 a month. That might be a high percentage. This is a way to get rid of those fees and get rid of that friction. Okay, now, again, whether it's Bitcoin or whether it's some other cryptocurrency, if I can get paid, get into the club, pay my bills, start saving, now I get on the road to investing. And once you get over that little hump of I have money left at the end of the week, or I have money left at the end of the month that was going into the check cashing system or was going to banks in overdraft fees or in monthly fees, and now I can get over that, now I can start saving, and now I can maybe start investing, and now I have access to credit and all those things that the unbanked, those that couldn't use banks, now they have access to that club and that system. And that is what is so exciting in the developed world about cryptocurrency and decentralized finance, is the fact that now you have access to the club, and the participation in the club is opening up even more. Again, we have to keep it really, really safe now. Once those people that can't afford to lose are getting in. They're not getting in because they're speculating on the value of cryptocurrency or on yield farming or some other DeFi tokens. They're not speculating on anything. They're saying, I need this system so that I can pay my bills and I can do better for myself and my family, because I don't want that money to go to the banks and the government who everyone else outsources their trust to. I can't outsource my trust because I can't pay the fee to outsource that trust. So I have to go around that and I pay a fee to someone else. This is saying we're going to get rid of those fees. We're going to lower those fees. We're going to lower that friction. The friction here is the education of learning how to use crypto wallets and getting more people involved and more people accepting of cryptocurrency as payment and more people accepting of it as payroll, as a way to actually pay for goods, as a way to pay your people. Once cryptocurrency gets accepted in that way and people understand how it works, how to use wallets and how to make it safe, then we can get more people into this ecosystem. We get more participation. We talk about that all the time. This system is going to give us more participation in the world economy. So in future lessons, in the next few weeks, we'll talk about in the developing world what the unbanked looks like, because that looks very different. But in the US and in the developed world, what the unbanked and underbanked looks like very often is people who it doesn't make sense to have a bank account. Now there's some who are potentially and not to stereotype, but there are some who can't go through the KYC process of getting a bank account because maybe they're not supposed to be in the country, right? But they want to be able to send money back home. So part of this system is if I get paid in USDC or DAI or something, remittances are a big deal, and I need to send remittances. I need to send money back home. I need to send money to Central or South America or Africa or Asia or someone back home. Well, I can use this system without having to go through the banking system, and it could be so much less expensive and so much faster to get my money today and send it back to my family wherever they might be. And now, not only am I getting to participate here, but now I get the remittances, right? That eat up so many fees of people who are trying to come here or trying to go to other developed countries and work so that they can send money back home, and the people back home can eventually save up and come over. Now what we've lowered is a lot of the fees and the friction to that. It doesn't take as much time and it doesn't take as much money, because what happens in remittances and banking and all these things is you either you pay more to have it happen faster, and you pay more to have it be safer. And if we can make it safe and fast and lower fees, that's what we're looking at here. So I get paid in this system. I don't necessarily have to have a bank account. I can participate in this ecosystem. I can pay my rent. I can pay for my car, pay for my food almost immediately that day. Then with whatever savings I have, I might be able to earn a little interest or invest a little bit. I can get a little credit. I can borrow. I can participate in this ecosystem, and I can maybe send money back home if I need to. I can send money to my kids, whatever I need to do. I can do that now in a much lower cost way, because those costs, when you don't make a lot of money, really eat in from a percentage point basis. And if it's taking me 10% of my income just to be able to use my money, that's not fair, and that's too much. And this makes that more fair and more participation and more money that group can save. So that's a little bit about how crypto and decentralized finance can help the unbanked become somewhat banked. And banked in this case means access to the services that banks and financial service companies provide. If we can give access to those level of services, that level of security, and that level of participation to so many more people, that is the ethos that Bitcoin started, that decentralized finance is supposed to be moving forward with, and that is what's so exciting about decentralized finance and the ability to help those that are the unbanked and the underbanked. So we hope you enjoyed this lesson. We hope you enjoyed this video. Please subscribe to us on our YouTube channel here. Visit us on our website, interaxis.io, Twitter at interaxis8. This is the Whiteboard Wizard signing off. We hope to see you in the next video.